Friday, June 26th. Next week is holiday short. The 3rd's a holiday. The Bureau of Labor Statistics, in its infinite wisdom, on Thursday next week will release payroll data for June. There won't be anybody at a trading desk. All the big shots will be out in the Hamptons kicking sand on 98-pound weaklings. And so if we get a surprise next Thursday, it could be a big surprise. But the semi-surprise that's already underway is that rates are rising. And we jumped from 3 3/4, where we'd been most of the winter, suddenly above 4 and 4 1/8, and typically you make a move like that, you fool around for a while before the next one, and the next one's already underway. We're finishing the week 4 1/4 at least. The 10-year Treasury note is moving up even faster than that, and so trying to figure out why, always why, and of course what's next. And my make on this is that the Fed's coming. The economic data is strong enough for them to proceed probably in September. Economic data will have to weaken to get them not to move. Whether they move once or twice this fall depend on the data. And so the markets are just as puzzled as I am, maybe more so because they've got a lot more of the money than I do at stake. And so everybody then trying to anticipate what the Fed does next and what the rate hikes mean. And the Fed has been at 0 since 2008. It's 7 years. The last time the Fed raised an interest rate was 2006. And even that period, from 2003 to 6, was a weird time. And so, given the nature of the financial markets, where kids are the ones at the screens, there aren't a lot of people at screens younger than their early 30s, which means their entire professional lives, they have not seen what an ordinary Fed tightening cycle looks like. And the prescription here has been volatility ahead. I mean, real up and down, rocketing around as the kids on those screens figure out what happens next. I'm sure that I don't know, but I do think that it'll be very difficult for the Fed. Every move that it makes is going to get a corresponding move in mortgages. We're not going to have the Fed lift off from 0 very neatly and politely and have mortgage rates stay where they are. And the question du jour, and for the rest of the year, is how resilient is the housing market? How much more of this can the housing market take before we feel it? And my hunch is maybe not very long, and that may limit what the Fed has to do. But the market movement, even this week, all of a sudden is shifting to trying to anticipate what happens next for the Fed. And here, Boulder, Colorado, Front Range of Colorado, strongest housing market in the United States, we're probably going to feel less than anybody. So is my hope. Have a great weekend.